Today is April 26, 11:42 a.m. We detected unusual options on QuantumScape. QS is the ticker symbol. QuantumScape will be reporting earnings after hours. So that's April 26th. And so in this video, number one, we're going to go over these unusual options we detected. And then number two, we're going to analyze them to see what the large institutions are trying to do right before earnings. And then three, we will use that information and set up a trade and show you what we are doing for the earnings on QS. Okay, so without further ado, let's get right to it. Today, the options, lots of puts you'll see here. However, keep in mind there is more on the bid side. So that does not necessarily mean these are bearish. And so when we look at the tape here, you will see here that there are these 8 strike puts and these May 19 strike puts. Okay. And also these July 8 strike puts. Okay, so these 8 strike puts in July are one of the most interesting to us, as well as the May 19s. There were these 10 strike puts here. If you scroll down a little, you'll see them here. You'll see that when we look at that chain, although you don't see much quantity here, and so a lot of scanners may not pick up on anything unusual here, what we detected was on May 19, you'll see here these currently, I guess, 11,000 of these in the volume here at the 10 strike puts here. So that's a lot of quantity here, and keep in mind it is less than the open interest, so these could be closing orders. And so let's assume that they were opening orders. We'll take two sides of it, right? We'll analyze it based on whether or not they're closing or opening. And so let's say they were opening orders. We believe then they had sold the 10 strike puts. Okay. And then what they did was they went out to July's and bought the 8 strike puts here. You'll see also here these 11,000. Okay. So how do we know that this order was all at the same, kind of done all at the same time? Well, if we look at the options tape here, and you see that the time around that time frame about it was around like 10:50 or so, and we go over there at the 10:50 time frame, you'll see lots of these coming up, right? You'll see lots of these 10 strike puts and then 8 strike puts. May's, July's, May's, July's, May's, July's, right? So and it is quite a coincidence they're all currently at the same volume, right? Okay, so we believe these orders were done together. And so let's analyze this. Let's say they were opening orders, right? Now, as you can see, this is an opening order in which buying power is actually 200 because it's a strike price difference of 2. And so it is a bullish diagonal trade where they are targeting the 10 strike here for maximum profit. Okay, so you'll see here the Greeks, positive theta, positive vega, and a positive delta. Okay, so that's if this May 19 was a opening sell order. However, if it was not, this would be very different. So they could have also sold this to close it, right? they could have had 10 strike puts that were very profitable since we're below that, it's in the money, and they were selling it and closing up that position to take profits, and then taking that amount of credit they got, using that now to buy the 8 strike puts. Okay? And so in that case, they would have they have an 8 strike put, and that would then actually be very bearish, right? So that's a bearish trade now. As it goes down in price from the current price of 7.4, it will be profitable because we will be above that zero line here of profit loss. So you can see here that that these two different trades of opening can make a big difference of either going bullish or bearish, right? And so this is why analyzing unusual options could get confusing to many people. Okay, so what do we do with this information? Since we have to make a trade today for earnings, we cannot wait for the to watch this volume and this open interest. So what we did was that we bought that put because we know that this is definitely an opening order. You'll see here our position here. We know that this is definitely open because this is greater than that open interest here of 37. There's 11,000 of them, right? So we bought that. And then what we did was, in case it is a bullishness direction, we bought that 10 strike here on the call side. It's only going for about $2 or 2 cents. Very cheap. Basically a hedge for the short position for earnings. And so this is our trade. So it's sort of like buying a straddle, but it's different dates here. One is going to expire very near term, and that's essentially our hedge for the earnings in case it goes up and it was a bullish trade, we will reduce our losses. If it goes up even more, we will actually have a gain here. So anything above this zero line would be gains. So we have, and if it goes down right away, it will also be a gain as well. So we are positioned kind of omnidirectional in both directions. And we will see what happens from this earnings. The only way it will lose is if it stays around this price range from around here and about here in our break evens. But the losses are minimal because we have a far out in time frame July puts, which doesn't have much of a theta decay because it's quite far out. And so this is what we are going to be trading with. This 10 strike, you'll notice also this 10 strike is actually all the way up here. And so if it does rally, it would have to rally past that 10 strike. And so keep in mind that initial trade, if they did not close that trade and it was an opening order, it could be a bullish trade. Okay. However, we have our 8 strike puts to anticipate a potential move to the downside from here. We'll also see, actually, if we look at the the recent analyst reports, it's actually Goldman Sachs had adjusted QuantumScape down to $4 and are maintaining a sell rating just in April this month. So it could possibly be one of these large institutions like Goldman Sachs shorting it because they are in the belief that it is going to go down. But again, these analysts, sometimes they are actually wrong in their predictions as well. So you never know. So you can't take, you can only take this kind of assessment with a grain of salt. Okay, so when we look at unusual options, we feel like we are more comfortable using that data to trade with. And so if this was helpful and you learned something, please smash that like button and subscribe if you haven't. Hit the bell icon and you will be notified whenever we see unusual options. Take care, everybody, and good luck.